Kamau-Kbn, we will use the KPC because I want to come to it, KPC company, that is Kenya Pipeline. Last year, they did the business. They sold the petroleum, that is their business. And when they sold their petroleum, you know, they have an advantage of monopoly.
Yes.
And in their monopoly, in Kenya, they supply 100%. In Uganda, 99%. In Rwanda, 75%. In South Sudan, 75%. So they made a turnover sales. Pesa ile yote waliuza ilikuwa that 8.5 billion in a year.
Yes.
Wakaenda wakafanya hesabu zao after kutoa all their expenses and all their liabilities, and that is expenses, wakabakisha and then even the tax, the government tax, and then after the tax, ile faida walipaki now is allowed 7.5 billion. 7.5 billion
kwa mwaka.
Kwa mwaka. Sasa wakasema they will take 2 billion for other operations and whatever. But now this company, remember the people that they are working there, they are working on behalf of shareholders. So when you buy the share, you become a shareholder. For example, then wakabakisha 5 billion, 5.5 billion. Wakasema hii 5.5 billion, shareholders watagawiwa. Kwa maana ndio waliwekeza ili wapate faida. So kwa hivyo wanaenda wanasema share ni moja ni pesa, kila share, the company has how many shares, then they are divided equally within those shares.
This amount now?
This amount 5.5.
Yes.
So if you and they were giving using 0.41 continuous. So if, for example, if you had 100 shares, how many will you get? Let's say 1,000. 1,000. It says that we will have at least allowed 400 shilling.
Yes.
So you'll be at the end of the year, depending with your shares, you'll be making this.
So if one is around maybe 4,000.
Yes.
If you have around 100 shares, you multiply by 100.
Yes, you multiply this figure. But remember, this figure keep on depending on the year profit.
Oh.
Yes, it is not constant.
Okay.
So now, the other reason why we buy the shares when they are taken to the market, and when we say to the market is an lobby stock exchange, they appreciate. For example, right now, and I think there is where we said there are two types of the share, ordinary and the IPO. Number 2 is IPO. We said number A is there is ordinary shares where there are so many kinds of the shares that you can buy even today. So, but there is IPO. The IPO means initial public offer. So the company want to come to the market and it want to introduce the shares, or it want to get some more shareholders so that it can raise more money. So what it does, it comes to the public and it tells, it passes through all the procedures,
yes,
and that has been read. And then when they come with the IPO, for example, like the KPC today, they are coming with a common price. That's why it is called IPO, and is 9 shilling per share. The minimum shares that you can buy with this 1 shilling is 100 shilling.
The minimum?
Yes, the minimum. The minimum shares that you can buy is 100 shares. So, and they are costing at 9 shilling. That is to say the total is 900. Niambie ni nani hata nunua shares? Nani hata kuwa investor in this Kenya? Anyone that is listening to me, let me explain something about the KPC, allow me. It was open on 19th of January to sell on this 9 shilling. And they will close it on 19th of February. So within that month, anyone can go and buy at 9 shilling. The amount of shares that you want. If you have your 100,000 shilling, you buy. If you have only 100 shilling, you buy. If you have your 10,000 shilling, you buy. So when they cross on 19th, what happened next? They go for a valuation, not valuation, they go for analyzing and allocation.
Meaning what?
It means, this is what it means. Let me lab something here. And these ones have already, we have, this is what it means. When they are allocating these shares, they are divided into 4. Number 1, they give the retail, that's the normal citizen of Kenya, 20%. No, let me start it this way. KPC, as a company, is selling 65% of its shares. So this 65% of its shares, it is to say they are selling 11 point something billion shares at 9 shilling, which is equivalent, they want to raise 103 billion shilling. So this 103 billions is this 11 billion, it is divided. The retail, number 1, the retail, that is the normal citizen of Kenya, has been given allocation of 20. The investors, the Kenya investors, they have been given 20%.
When talk about retail
yes,
is
now we are dividing these 65.
You're talking, here we have a retail, we have an investment.
A retail is a normal person.
An individual.
An individual.
All right.
Yes. An investor is a company. It has been given 20%.
Yes.
Then we have the East Africa. East Africa, that is, they have been given 20%.
East Africa community,
East Africa community,
or countries?
Yes, they have been given 20%. Then we have the foreigners, other countries, or the internationals. They have been given, is it 20? Let me get, because here there is this will be 20. They have been given 20. Then there is the petroleum companies that they operate. Remember, this is a petroleum company that supplies the oil. So they have been given 15%. And there is the KPC employees. They have been given 5%. And this 5% is a lot out of these 11 billion. So now, between 19th and 4th of March, is where they are now considering, were they being overpurchased, or they were less purchased. It's where now they make the decision. So it is here in between when now on 4th they shall come and make a declaration and or the announcement. It is oversupplied. And now the people who had bought, if it's the retails, you are going to get allocation of these shares. So you bought your 5,000 shares. So, and it is oversupplied. You be told you'll be given 3,500. So 1,500, you'll be refunded times 9, so that you get your money back between 4th and 9th of March.
Oh,
yes.
That means, in a simple term,
yes,
you might have bought an excess,
yes,
of what is there.
Yes.
So if it is an excess,
yes,
you're given back the surplus, the surplus. Yeah.
Yes, it is refunded through your M-Pesa or through your bank account, depending on what you used.
Yes.
So now, on 9th, they will be taken to the market.
Yes.
So where is the market, which we said is the Nairobi Stock Exchange. Now, when they are taken to the market on 9th, and they are launched in the market, there is Mr. Kagi who wanted the shares. So, who wanted the shares, but he was given minimum. According to his purchasing power. He wanted 1 million, but he was given only 100. His purchasing power is 1 million. So when he has been given less, then on 9th, he is there with his million.
Yes.
And what happened? What happened is, and Pastor Kamau, he had bought his 10,000 shares. And he is a low risker taker. Pastor Kamau wanted, when the shares has been taken to the market, immediately when they go to the market, auziwe na stockbroker wake. But Mr. Kagi is here. He is a higher risker. He has come with his million. So now, me, I'm selling my 10,000 shares. And remember who is doing it on my behalf is the stockbroker. You have your stockbroker. He comes and say, I want 10,000, 1 million. I have my 1 million. I need 100,000 shares. So you cause the demand. So the shares, they appreciate. From 9, because you are putting the demand on them, you need them, but they are not enough.
From 9 to maybe?
So if the projection, we say we are expecting 20, and to the high most, 40.
From 9 shillings to 40 shillings?
Yes.
Before you continue, I want to track something here.
Yes.
That number one, I bought shares, or you bought shares from the company.
Yes.
And up to date 9, for example.
Yes.
That means up to date 9,
yes,
you are only having your shares between you and the company.
Yes.
Now that you have, now the company has brought the shares to the stock market.
Yes.
At that point now,
yes,
the company has no any other business
yes,
with the shares.
Yes.
Now it is me as an individual
yes,
who may decide to sell my shares to,
yes,
according to how I'm getting it.
Yes. So you
I can sell my shares.
You can sell your shares. You are
at the
to
stock
the
market.
Stock market.
Oh.
All of them, they are there. So now we were saying the point number 2 for the appreciation. You bought it at 9. Then they appreciate. We want to use the figure 40 because it's what most of the people are projecting they will settle at. So 9 to 40. So you bought your, let's use 10,000 shares times 9. And we assume you are given all of them. This is 90,000 that you spent. When they come to the market, your 10,000 shares, you multiply by 40. After 2 weeks, you say you want to sell them, and now they are selling in the market at
40 shillings.
Because Akina Mr. Kai, they are putting the demand they want to own, the KPC. So now they have appreciated, yani zimepanda. Are they at 40 or we use 50? Let's use the figure of 50. Although most of the people, the market is projecting 40.
Yeah.
So within 2 weeks, 10,000 times 50, that is 500,000. Am I making millionaires or not?
You are.
Within
Definitely.
2 weeks,
yes,
I can make millionaires here.
Yeah.
Is this the way to prosper? Prosper in all
ways.
No, I have
see.
a good plans. The plans to prosper you, to give you the hope and the future.
True.
Is this not the plan?
It is.
Yes.
Now,